365, shake my hand, ladies and gentlemen, and what a beautiful day, beautiful asset, the CAD and Swiss franc. That's what we're going to be talking about. And I'm excited about this asset because I've been doing long wave analysis for the year 2023. Obviously, mapping out trades for the long future, and a few times, very, very, very few times in the last 20 or so assets I've done, have I had a live trade still running from last year's analysis. And CAD Swiss franc is the beautiful trade I just let run. It's the beautiful trade I just let run. So it's quite exciting so that you guys actually see that some, you know, this is the theory, this is the analysis, but I practice what I preach, right? Unfortunately, like most traders, you do wind down most of your trading in December, right? If it's the end of the year for you, you want to know what kind of a trading year you had. You lock profits, you close some trades, you grow your capital, etc. But I let CAD Swiss franc run. I just let it run. I let it run. I let it run. And here's the proof. So let's go through my live account so that people don't say blah 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 blah. And then I'm going to get into the actual analysis of the day. So check this out. Right. So it's actually beautiful, right? So you can have long-term swing trades running like that. You absolutely can have price moving and moving and moving as long as you understand where it is going. Remember, long-term analysis means I tell you where price has been, where it is right now, and where it's going, like we did the whole of last year in the war rooms, and what a beautiful trade this is. Right, CAD Swiss franc, I'm pretty sure everyone's indicators just screaming at them, screaming. You know that markets are now oversold. So let's see what the retail traders are doing. Right, let's see what the retail traders are doing their ways. There we go. CAD Swiss franc, we have, sorry, that's not clear to me. Let's just see what's going on here. Aha, right, so most traders are long. They want to go up. Right, so 98% of traders on this platform are long on CAD Swiss franc. Long simply means they're buying, have already bought, are holding buys, or have pending buy limit orders, buy stop orders. And there is a total of 4,915 lots that have been put up to try and push CAD Swiss franc up, which amounts to 29,450 positions. And you need to do this, guys. You need to sit down, do this retail trade. I've got one researcher of mine in the academy whose job is to make these silly tables for me, which I absolutely appreciate because he's not a trader, he's a market analyst, and he does a great job at it, like the tedious work behind this type of stuff. Imagine compiling all this data of retail traders and updating it weekly, and compiling COT data of the institutions and updating it weekly. When you compare the two and look at where CAD Swiss franc retail trader positions are and where the institutions are, it is not that difficult to choose a side. It becomes much more clearer on who's right or wrong, right? So you can see, they are long, there's not much to say, right? 2% of traders are still short, and I'm proud of that proud 2%. But let's see, what's the plan? Leroy, how am I going to let that sell run? I have to keep tracking markets. I have an alert every 2 weeks where, either it's time to lock profits or time to change my mind. And the reason for that is because there is no bottom, right? The markets have reached an increase in the equal low, which is all the way here. This is all the way 2015. But I'm jumping the gun. I am jumping the gun. Let's quickly do our analysis the way we always do it. So let's start off with the 12-month chart, right? And then I can also remind you guys of the stuff we discussed in the war rooms last year, right? When we were looking at CAD Swiss franc. All war rooms last year were based off the governing time frame. Please remember, last year in my war rooms, I never at all went to the 12-month or 3-month in front of you guys. There's just never time. The war rooms are always long and draining so many assets in one video. And we're gonna go back to that. But all we did talk about was the fact that if markets dare, I told all of you, if markets dare break a valid demand, if they break a valid demand, which they did, right, then price continues. And price broke a demand in December, and the bearish engulfment pattern that tapped the demand was right above, right? So where else was price supposed to go? From October, November, bearish engulfment pattern. I expected something like this, by the way, and I was willing to hold myself, right, if price to do something like this and then go to the downside. I was absolutely fine with that because I knew markets would follow suit and still fall. Markets would follow suit and still fall. But actually, what happened, I didn't even bother to go back to this higher supply. In fact, price simply just kept going down. Simply because of pressure, pushed price high a little bit, but within the same range as the so-called demand, and has gone all the way, and that's the debate, right? Is it time to exit? Someone like me now, and I'm so glad this asset is happening in front of us so that I can actually decide maybe it's time, maybe it's actually time to close. And I've shown it to you publicly so I can close and not be a story that once upon a time I held a sell for almost 6 months, right? So it might be something to investigate right now. Or take a bet, right? A gamble that markets might continue going low, right? But let's break this asset down from the jump, right? So number one, what we have here is an interesting asset, right? Right from the beginning of time, we can see these long wicks, and I've spoken so many times about pairs that are with the Swiss franc and have long wicks. I've spoken about this so many times. Pairs that have long wicks, right, with the Swiss franc, right? So this asset starts, goes all the way back in time. All right, let's go to the 12-month chart. That's why it's taking forever. Sorry. Let's start from the very beginning. Right, so I'm on the 12-month chart right now, and you can see here, I'm looking at, all the way from 1982, sell profile asset, supply credit, supply on it, supply credit, supply on it, bullish engulfing pattern, back into the supply on it, bounce from the, bullish engulfing pattern, supply credit, supply on it, supply credit, supply on it, supply created, supply on it, right? There are more supplies than demands, and that's how you backtest an asset. And this is what we're doing. We are low, very low on the curve, right? But we are low respectively of where price is today. 10 years from now, this could be the middle of price, and price is all the way down there, right? So just remember that, right? But right now, markets came back, swinging, right, straight in for the 2017, 2018 supply, and we got a tag last year, January, and we covered this asset a lot in our war rooms last year on the channel. All my trading signals completely for free. The price for my trading signals, I will not charge you for trading signals. I don't have a private trading signal group. The price of my trading signals is paying attention. And I know that's the most important thing that most retail traders can't do. So you can't even blame me. I don't want your money. Most of you can't pay attention. Most of you can't can't keep a simple trading journal because you don't want to be a disciplined trader. You want this to be fast money. And I don't teach fast money. I don't make fast money. You can't keep track of a simple pending order. You can't come for a 2-hour video once a week that will increase and benefit your trading life. And you don't want to hit subscribe, right? But all of the stuff was broken down week after week after week after week the whole year. And it won't be the case this year. Right, so markets finally make it back into the supply, and then markets drop, right? So we are in an interesting crossroad because remember, I keep telling you that price must fill the wicks, candlestick wicks, and this wick has been fully filled, right? Markets are here. If markets by the end of the year, so we're talking December, January 2023, you can see there's already a tiny wick being formed at the bottom, right? A tiny wick, right? I've just zoomed in as much as I can so as to draw my line, right? So we've got equal highs, but look carefully, look carefully. See this there? Bing, 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 right? This, to me, as I adjust this for one more time, to me, it looks like price has kind of like already bridged and got a little bit lower. right? That's not good enough. We have to still see how this candlestick is going to close at the end of the year. But for the most part, this wick has been filled, right? So someone like me in this position, it might be best, unless if I'm looking for a multi-year swing position, that's a good trade to close right now. That's a beautiful bump into my trading capital for an account that I haven't really been actively building in 2023. This has been a beautiful sell, man. I mean, if you come to CADCHF Frank, and again, just to show you that I do practice what I preach, this is my analysis chart, right? My FXXM, and I've shown you the live account. And let's go to the daily time frame. You will see we're still holding, right? We're still holding all the way from about September last year. We managed our trade perfectly. Managed to trade simply means broken even, and then now we've been dragging. You can count the many supplies along the way. This was the first big break here. Once this green zone was taken out, it was just beautiful. I think right now we're at a 1:11 for trade one, right? If you have multiple sell entries along the way as price gives you valid supplies, and this is what you're looking at, right? On the daily time frame, if we were to go low, right, this would be my expectation. This would be nice if we're to go low. But I do believe, now might be a good time to close. Personally, for me, I've been holding to September. This is an incredible amount of pips to bag as a swing to positional trader. This is the type of patience we talk about, right? With the type of good account, good leverage, good risk. This is good money. This is good growth for your trading account. But it's also good practice, right, on trading. But at least again, I get rid of myself. It's just exciting to have a real example of long-term analysis and long-term trading, coupled with long-term analysis, right? So I won't waste any more time. Sorry, I apologize. Right, so there we go. So we've got this top one chart in front of us, right? And for me, sell, sell, sell. Not demand inside, just equal lows, right? So we need to negotiate around equal lows. We go to the 3 months chart, no demands inside, negotiate around equal lows. Broken 3-month demand, which was not even valid, but definitely broken monthly demand in that area. And look at how far the next presidential supply is. It's so far. I mean, this is so far. I mean, you need about 2 to 3 to 4 years of it, right? Maybe not 2 to 3, 4, maybe 1 to 2 years. Well, or unless we get monster green candlesticks like this in the 3 months chart, with one financial quarter, the CAD is just unstoppable, right? In one financial quarter. But right now we're looking at equal lows. Again, no demands inside, right? So maybe a governing time frame can give us a supply that's closer. There we go. And that's what we want to see, right? So if we're to continue the thesis that CAD-Swiss franc is going down, then we're looking at taking sales somewhere here. Valid supply in the middle of the way, has got the whole backing of the sequence. There are higher supplies though, right? For example, why can't price break the supply you marked up and come up here, Leroy? I don't know. Let's find out. Let's go back to the 3 months chart. Let's imagine prices has stopped. So let's imagine that we have all the rules met and price starts to buy. So we start to see a green candle here in January, March, in June, July, August. In the third financial quarter, there's a green candlestick, which will then allow us to draw a Fibonacci. Because right now we can't draw a Fibonacci because according to the Fibonacci rules, we need a swing high and a swing low. But let's say we create one in May, June, July. The third financial quarter candlestick gives a green candle. You can tell that supply that I draw, the governing time frame is this yellow line, and this supply here is slightly in between a PCP, a continuation zone, right, and just underneath our famous 50% module, which really cuts across this order block here, right, and this whole area. If I switch to a Kinihashi, let's see what it gives us. I hope I'm not going too fast, and if I am, hit the link down below. Of course, it's done at your pace, the way you like it. All right, so there's not much difference in a Kinihashi. All right, but here, yeah, so the course is very slow, very clear. I'm here, I'm just making 20-minute videos just to quickly give perspective on something that I hope you remember between now and December. Right, so this is where that yellow line is, and then our monthly supply, the very first one that is no confluence with the 3 months chart is also a PCP area, right? It's probably the 23 comma something percent, right? There we go. It's the 23.6% here, this area there, right? So there's nothing I can do in terms of perspective except to say risk appropriately. If you want to sell, try and sell there. If it doesn't work, then you know where the next sell is. But remember a couple of things. Number one, we're very low on the curve. When we're low on the curve, we don't like to take low sells. When we're low on the curve, we don't like to take low sells. Let's look left and see if there have been any lessons in this. Not really. Every single supply has been somewhere up here, and every single supply somewhere up there has worked. Right. So this might be a good place for price to start. If price was to really break structure now in on the governing time frame, so May and June, or close on the other side of this yellow line, then definitely, I'm even more confident about rejoining the sell. But for now, I think it's time for me to take profit, man. And think about it for the rest of the week, and then we shall see. Because you saw for a fact I only have one position open. If I had multiple positions open and I've been selling multiple times on this chart, maybe that would have been I'd have let the original sell run and close all the following sells. But because I only have one position running, it's most likely better for me to just take profit and then wait for price to come there. Let's go to our weekly time frame and see what's going on here. We've got drop, base, drop, but a long base. We don't like long bases. We like price to leave immediately. We've got a lower supply being formed as well below this area, so it's getting trickier and trickier and trickier and trickier. It's getting trickier and trickier and trickier and trickier. Right, so just be mindful of that, and then we've got higher supplies, right? So please watch this area of value, watch how price comes to it. There's no candlesticks to read yet. Watch is price very parabolic from the upside on the weekly time frame. I want to see what's going on this low. I just want to see if there are any demands. No demands yet, just long wicks, right? Just a long wick still. So again, price has no footing. You need footing, like buying power, some standing ground, right? So we don't even know how strong it is. In fact, instead of waiting for a month and whatever I say, let's see how this candlestick is already creating a wick here. So let's see how the month of May, 2 weeks into May, let's see if price opens candlesticks to the downside or price starts to formulate movement to the upside, right? In the next 2 months to look out for, and then on the daily time frame, clean drop. And remember, like I said, this is where all that consolidation noise is on the monthly, weekly time frame. If I can just tighten this area of value to just see something like this. I'm on the daily chart and then go back to see if there's anything controlling it. There is nothing. So if I can do this, and this daily supply here, it would be the same one that's in that monthly supply that we're looking for. That's only 2 places I'll probably try and risk money to sell again if I was to get out of this trade for now, right? And then obviously you've got something like this here. Price really falling parabolic, price really doing crazy damage on its way down, breaking structure to the downside, right? So this is absolutely important key information. So now all you need is price to redistribute, even if it's not a swing position like mine, like a position of trade, but a short swing, right, where you want to just do daily supply to daily demand. So then maybe price as it leaves this area this week might start to take profit there. I'm going to show you that will give you a good risk reward ratio. At the very least, a 1:3. At the very least, a 1:3. At the very least, right? It could be slightly more, but at the very least, price would definitely give you where price is right now. Even the yellow line, this is literally almost 1:4. All right, so you're looking at something like that. If price comes back and distributes appropriately, then yeah, maybe we shall see. I hope you've enjoyed this video. I hope you've learned something. 365. I'll see you in the next video. Don't forget to like, share, subscribe. But more importantly, for you who wants to learn, for you who wants to actually make money, don't forget to hit the link down below. Right, hit the link down below. And join us, join the family. Until next time, peace.